live. Let's see. Yes, I'm a little frozen, but it looks like I'm live. And let's see if we can adjust this. Happy Tuesday, besties and bosses. I'm so excited to be with you. I love these conversations. I love getting to hang with you. I'm doing my thing where I just check in the group. It doesn't always show that I'm live. So we are just going to bank on the fact that I am. But when you see this, whether you're live or on the replay, say hi. Let me know you're here. I always love to know who I'm connecting with, who I'm having a conversation with. It also makes it way more fun if you are live, if I know who's here selfishly. Let's see. We've got so much we're going to dive into today. Today, I want to have a very important conversation. This is a conversation that I personally think is huge when it comes to money. We're going to talk about the money conversation no one's having, and I think everyone really needs to. It's also what I've personally been focused on behind the scenes for the start of the year. And I mean, I'm always focused on, but my husband and I have been spending time talking about this. And I want to have this conversation with you and dive into a whole bunch of money things before we have our master class next month, or sorry, not next month, next week. So we have a free master class next week. What is it called? I can't even remember the name of my masterclass. Leverage your unique millionaire money blueprint, where we're going to talk about your money blueprint, what you were given by default or really growing up and learning, and then really how to rewrite that intentionally so it serves your financial version of success. And we're going to dive into really how to look at that, how to shift that, how to change that, how to rearrange that so you can have a healthy relationship with your money and also understand where your unhealthy and healthy expressions and relationships with money are showing up, what that looks like for you. Because what that looks like for you, what's really fascinating, we'll talk about this more next week, but what's really fascinating is your healthy relationship with money can be someone else's unhealthy relationship with money and vice versa. And I think that's why this is so important for us to talk about and to identify, and really helpful at the start of the year, because you can use this then as your framework for the rest of the year when you're looking at the money you're making through your business and what you're doing with that. Today, to prime us for that, I wanted to have a conversation more about what you're doing with your money. Let me pause. If you haven't signed up for the masterclass next week, it is free. It will be in the Facebook group. It is not going to stay in the Facebook group because we are going to turn this into a paid offer. If you want to get access to the masterclass, to the replay, and to the bonus playbook we made for this, which I think is one of my best, y'all. I think we make some pretty good playbooks. This is a really, really juicy one you can use to revisit this over and over again. It has some really great additional tools in there for you. I think the bonus playbook alone, we could just sell. So I would sign up just for that if I were you. It's free. The link, will drop it in the show notes. I believe, let me see if I can pull this up. I believe it's kimmargetsinger.com / let me see here. What is it? It is kimmargetsinger.com / millionaire blueprint. So you can grab that through the link, sign up for it for free. We'll make sure you get access to everything and you'll get access to those replays. That will be next Tuesday, I believe. And while we're doing housekeeping, because I always forget this, to announce this, we do a giveaway every week on the live to thank you for being here. I love having these conversations. I also love when I get to hang with you and hear from you and know who's here with me. So if you say hi, leave a comment, leave an emoji, let me know that you are here. Today we are giving away one copy of my self-study course, Get Unstuck, Unlock Your Success. It's a mini mindset course. It walks through helping you identify the most common mindset saboteurs and blocks that show up for entrepreneurs, creators, and coaches. So you'll get that for free. We'll give that away to one person. We'll DM you if you are the winner. All you gotta do is say hi now or on the replay if you're watching, and we will pick those. We usually pick those on Friday, and we will DM you with those. Okay, all of our housekeeping out of the way. Let's dive into our conversation. This one, if you know me, you know this is like my obsession. My husband would probably laugh if he knew what we were talking about today, because I feel like this is just like the way my brain is wired and what I'm always talking to him about and thinking about. I am, as you I'm sure know in this group, if you know my work, I'm really fascinated by money, and I have been studying money and success literally since I was a little kid. I had my first so-called business when I was about 5. If you would like to know, I think my first business was a post office that I made, where I made my own envelopes, my own stamps that you could buy, and then I would charge you as a post office. This was in the Netherlands. I don't think it was illegal in any way. I would charge you if you wrote a letter to send it to a family member, especially, and I charge I think extra if they lived down the street or something like that. That was my first business ever. I had bake sales. They were always profitable because I marketed and advertised in our neighborhood, and always had a special upsell, like packet bundles, where it's like you could get the lemonade plus I made brownies or something like that, which doesn't sound very good together. I had a babysitters club, which I totally borrowed that idea from the books, so I cannot take credit for that. And I had all sorts of businesses before obviously starting this business. I sold movie theater tickets to our home, and you could buy popcorn as well. Plays that we put on, all sorts of things. Anyway, all that is to say, I've been fascinated by business, by making money, but I've also been fascinated by money itself and leveraging money and building and accumulating wealth. I started making money from little side jobs and allowance as a kid, and I quite literally started saving it and trying to think about what to do with it and how to use it to make other money when I was like 5 or 6 years old. I think I put this in either the email for this live stream or in, I think I wrote a post recently where I was sharing, I think I'm probably one of the, oh, it's one of the promos for the master class where I shared, I think I'm probably one of the only 6-year-olds who, we got robbed when I first moved to the US from the UK. We got completely robbed. I think they had been kind of like following that we had moved from out of the country, and so we had everything, like all of our belongings still like in suitcases and boxes, and we got, I mean, wiped out. They took everything, like suitcases with like family photos. We finally got back like a decade later. Someone found them at like a flea market or something and gave us some of those family photos back. Like all my mom's jewelry, like everything we, like they literally stole half a jar of peanut butter from our cabinet. Like everything was taken. Obviously not the furniture and little things, but I had a jar with cash in it, and I had been stashing my cash and was really mindful of how I used and leveraged that cash as a kid that I was making from those little side businesses. I say businesses in air quotes, you know, that I had, and from the allowance. I probably got like 50 cents a week. Did anyone else get allowance as a kid that I had in there? And I think I had about $9. And I remember being so relieved that they hadn't taken that money that I had put aside. So I share this with you just so you can see this is something I didn't just like decide yesterday to talk about. My brain has been wired to think about this for my whole life. And as I've been in business, well, even before business, when I was acting, when I was waiting tables, I started investing at 21 into my long-term retirement. And, you know, as an actress, it's not like they give you a retirement plan like they do if you have a corporate job. So these were things I was just starting to do because I've just always really been interested in money, how we make it, making it on your terms. I acted before I had this business, right? I think how you make your money matters so much. And as I always say, it's all about the money. It's not about the money at all. We talk so much about the mindset component of it. And what I want us to talk about today that I just don't think we're having enough conversations about, if any, in our online space is what you're doing with the money when you make it, when it hits your bank account. Now, I think we do have some conversations about profit and profit margin, and we'll talk about that briefly today, but I really specifically want to talk today about how you're leveraging that money that you're making, and I want to talk about it through a couple different lenses with you. So I'm pulling up my notes here because I have a lot I want to say. I want us obviously to have a chance just to talk a little bit about the thought process about the money you're making. I will give you probably 10 disclaimers today that I am not a financial advisor. I am not a financial planner. I am not a CPA. I am not an accountant. You should not take financial advice from me. I legally can't give you financial advice. So please, I will say this multiple times, this is a disclaimer, but also really important as a business owner, whether someone is sharing financial insights and their thought process around money, or they're sharing strategy or mindset insights. Really, I think we're in an era where there's so much information at our fingertips, and now we have bots that are going to start spewing more information out. And I think it's a beautiful time to be alive and to be in business. And I think we are also in an era where having discernment and really taking your own power back and exercising your discernment about what you're taking on, believing, taking action on is so crucial, and it's such a skill as an entrepreneur and CEO. So I'm going to share today my thought process around what I do with money, how I think about this. And I would invite you to try it on for size. See, does this resonate with me? Does this make sense for me? Does this make sense for my version of financial success? It might not, and we'll talk more about what that looks like in your blueprint next week. What I'm saying today isn't necessarily the right thing, but I do want to start having the conversation. Even if you disagree wildly with what I'm saying, that's a really powerful thing, because then we can start still having this conversation and thinking about, but what am I doing with the money I make in my business? Because so often in our space, and this is not a bad thing at all, but I think our conversations can be very lopsided, where we're just talking about making money and making more money and scaling and scaling and scaling, which is wonderful. I like money too. I like making more money, but we're missing a very important part of the conversation, and a very important part of the conversation that really is where your long-term sustainability comes from in business and in life. So I want us to talk about that today. I'm going to share about my thought process. And again, I will keep saying this. obviously I'm not a financial planner, advisor, all of that. You shouldn't take advice from me. But even if you don't agree with what I'm saying, that's the beauty of being able to think for yourself. I always tell clients, I don't care if you agree with me. Like, my job is not to be right. I'm not here to be right. I'm here to share some perspectives and thoughts to help you to think about what's right for you. So I hope that that is the perspective you can take as we're chatting through this today. I'm going to share specifically how not only I'm thinking about what I'm doing with my money, but some specific ways I am leveraging my money and investing, and some other opportunities that are out there. Again, this is what's right for me. I'm not saying this is what's right for you, but what I do know to be true is what I have seen is so many of the ways I've learned to invest and leverage my money have come from having conversations with people I really respect and people who I respect the way that they've made their money and how they've built their wealth. It's not necessarily stuff I've like Googled. And so I hope, if nothing else, I can open your eyes to some ways you can think about what to do with your money, because I know some of the things that I do with my money now I wasn't aware of 10 years ago. I also know I've made plenty of mistakes. Part of building wealth, I know no one wants to hear this, part of building a successful business, right? These are so parallel, is being willing to make mistakes. And we learn through those mistakes, we learn through those things. But you also get to benefit through some of the mistakes I've made with money. I think I'm great. I think I'm really just naturally good with money and have a very healthy relationship with money naturally, and I've still made mistakes. So you get to borrow from those today. So I'm going to highlight what I'm doing, some of the mistakes I've made, some opportunities you can think about in terms of what you might want to do with your money. I'm going to be talking a lot about the mindset of being wealthy. And then I also want to close by sharing one way I see people who are really trying hard to be great with money unintentionally cost themselves what can potentially add up to millions of dollars over their lifetime. And I think it's very counterintuitive. I think it is an opinion that you might not like, that people sometimes look at me and they're like, really, Kim, that's what you think? But I'm going to share it because I find this was one of the biggest lessons I learned when it came to leveraging my money, and I would like to share that with you. And then I'll also share the ways I leverage my money that aren't necessarily like stocks or investments like that, and what is my non-negotiable when it comes to investments. Again, you don't have to agree with me, but I think these things are helpful to hear from someone who has been spending their whole life thinking about this, studying this, and who is also, just for context here, I make multi six figures per year in my business. What I think is helpful to understand and to know is, yes, we've made $1 million revenue in the last 4 years, 700K cash revenue in the last 2 years from a one-on-one coaching model. What I find a lot of freedom in, and the way I'm thinking about money and what we're talking about today, and what I really hope to bestow to you, is that, yeah, I absolutely believe I have $1 million per year coaching model, and I feel completely detached in the best way possible, where I both know that is happening in my business, and I feel no pressure, no attachment, no urgency around the timeline. I'm sort of like, if that happens tomorrow, I am here for it. I'm open to receive. If that takes 10 years, I'm here for it. I'm open to receive. I feel no like hustle to keep making more in my business, because I know my business is set, and I very intentionally built it that we use a revenue profit sharing model. So a lot of my scalability is both in what I'm doing and also really up to my clients, and it feels very important for me not to put pressure there. And I very intentionally built a model where if I change nothing else in my business, we are set to make between about 330 to 375K, maybe a little more per year. But it's important to me that I'm not overworking, that I'm, taking care and prioritizing my life. We could probably push that up a little bit more without even relying, too heavily anything else. But pretty much if I just set it and forget it, that's what we're bringing in. And I very intentionally have focused on having a very healthy profit margin, and then very intentionally focused on what we're going to be talking about today, where I know unless something crazy happens, I'm set on minimum to have multiple millions. When I retire, I should have, believe, between 5 to 7 million if nothing changes. When I retire, I will be able to retire early if I want to. I've been able to retire my husband. He got laid off, but we're calling it that because he gets to act. But on a revenue in my business that I think is excellent, but by the standards, our online space, where I think a lot of teachings are, you're only going to be able to have enough money if you keep making more, if you keep making more, if you keep making more. You're only going to be able to retire your spouse. You're only going to be able to retire yourself if you keep making more, if you keep making more. I think or what I hope you'll take from this conversation is you can set yourself up for millions and really great wealth and a lot of freedom and a lot of security and a lot of ease in your business. I think I have one of the simplest, easiest business models. I'm not chasing making more money all the time. I have none of that stress at all in this business. And yet I still have that financial security. And that's what I want to offer here. You can make and set yourself up to have so much money without always having to chase making more money. And the beauty of this is when you're not chasing always making more money, and I feel like I need to say, I by no means think what my business is making is not a lot of money. I'm so grateful. I think we are incredibly blessed in this business. But in terms of, the online space where we're talking about like making $1 million a minute kind of a thing, and there seems to be a lot of pressure and noise to like almost like keep up with the Joneses and always make more. And there's a lot of focus, I think, on the external, what you can show and what people can see with the money you're making instead of what you're doing behind closed doors that really set you up for a lot of peace and ease and financial security. So I'm not saying like in no world do I think that that is not very abundant and very privileged. And what I want you to see is you don't have to chase millions to make millions in your life. And I hope through this conversation that will help release some pressure for everyone, but also help you see some other ways to leverage your money that give you more of those benefits. And let me pause and just see. I don't think I have any comments, but if you have thoughts, questions as I'm talking through this, please, please, please throw them at me because we are going to dive into all sorts of things. I know I'm just like on a rant about money, but that feels important to share. So let's see here. What do I want to start with? Well, let's pick up from what we're just talking about here. So, and just the way I'm thinking about money. What I believe to be true is the way you make your money matters. Obviously, you know that if you've hung out with me at all, I talk so much about your version of success. I think making your money in a way that's alignment to you and your version of success and financial success is where the sustainability and longevity comes for you. I think it's not just about the money you make, but how you make it that matters, and then what you do with it. And what I really like to think about as a business owner and as someone who has a really deep respect for money, and I think I have a great relationship with money, and I think I'm a really great steward to my money, is how I'm leveraging my money to invest both back into my business and into myself and into my self-care and I'm going to talk about how I think about into spending on things that bring me joy, and how I'm investing in my long-term wealth building into assets. So I'm going to explain this in two different ways. I think first and foremost, let's just talk about when you make money and it hits your bank account, the profit. So, right, you make money, you have revenue. And I think what's helpful, this is something I share a lot with what my business brings in. What I know is there are many million-dollar businesses that I'm bringing home far more because I have a great profit margin. That's not necessarily the conversation we're talking about today. But I do think through this lens, something I would invite you to think about is instead of just chasing big numbers because they make you feel good or because you can prove something or because you're trying to keep up with someone else or because you think that's what your business needs, the profit you're taking home and this is almost going to turn into another conversation. A high or low profit margin is not like one is not better than the other. Different businesses require different expenses, and that is totally okay. And I do think we can start to think like globally as a community, as businesses, a little bit more about being really intentional about building businesses that are also giving a healthy profit margin. So you're paying yourself well. With the money you're paying yourself, that's your profit. Right, so when I share my revenue, I'm not taking all of that home. I invest heavily back into myself, into my own coaching, into my team, into my business, right? There's a portion I take home as my profit. When you have your profit, what you can do with it is you can spend it or you can leverage it. And the way I like to think about this is based on how Robert Kiyosaki talks about this. He's the author of Rich Dad, Poor Dad, but I think he does a really great job of explaining that wealthy people really think about using their profit, the money they're taking home, to invest in assets, and they have more assets than they do liabilities. So what this means is, I know this is like a little bit like we're in economics or something, but I hope this is valuable and helpful because I think this is just, again, the conversation. It's not as sexy. It's not as fun as saying, I just bought, I don't know, I just dropped $500,000 on some trip or on a car, and like I can show this on Instagram. There's nothing wrong with that, but it's not as flashy as that, so we want to ignore it. But I think this is the stuff that your future self will thank you for. So a liability isn't as bad as it sounds, but that's the stuff you spend that um, liability is my phone, right? It's anything you're buying that isn't going to make money for you. And an asset is anything you're investing money into that has the potential to make more money. So if anyone has watched Shark Tank, what's his name, Mr. Wonderful? I feel like he's always talking about money being like soldiers that go out there making money, right? An asset is thinking of your money like a soldier. This sounds so horrible, but a soldier that can go out there and make you money. And it oppositely, or it's oppositely a word, a liability is something you're getting, but like for enjoyment, but it's not necessarily making you that money. Now, the way I think about the money I'm making, I actually really believe in paying myself well and spending a healthy amount of money on what someone would consider a liability. Because I do believe that money isn't only about like just make money to make more money and let's just think about building wealth. I think as business owners in particular, and I talk with my clients about this quite a bit, and we'll talk about this in depth next week in our masterclass, but it's very important, I believe, to embody and to enjoy the fruits of our labor and to feel the embodiment of the money we're making and to feel wealthy, right? To feel rich, and not in this way of like I need to have like diamonds dripping off of me, though if you like diamonds dripping off of you, you do you. I'm just not a big jewelry wearer. But I do really, instead of just like pouring all my money into assets, I really do believe I am my own best asset, that I am the golden goose that lays the golden eggs in this business. And I am always first and foremost going to invest back into myself, particularly my education, my brain, and my health. I know this business isn't run without me. I don't have the kind of business I'm hoping to sell for someone else to take, to take over. I literally run a one-on-one coaching model business. So I'm the money maker. So while technically on paper, investing back into myself and the things, my education, my mind, my mental health, therapy, coaching, my health, right? Clean food, and my well being, right? A beautiful home, things that make me feel really abundant and rich. On paper, those things are liabilities. I believe I am the biggest asset to invest back into. So I'm sharing that. You don't have to agree with me, but that's what I believe. So I have always invested back into myself first before anything else. I told you I invested in retirement like 21. I started saving really like I funded this business all through money that I invested and saved. So I had a large sum. I think I had $50,000 I invested in this business that I had my own, that I had built from my previous life acting to invest into this business to start it. But a lot of that was investing right back into me. And when I was investing that money, just for context here, I wasn't investing to make money elsewhere because I know if I invest into me, I can get the biggest return possible. This business has given me a return that the stock market, that a retirement plan, that real estate, frankly, could never, ever give me, right? That $50,000, half of that was like paying for rent and for things when I wasn't working or making money. But if I think about what I actually invest in this business, it has been, I don't know what the numbers are, but it's been exponential in terms of what it's paid me back. So I offer that as something to think about because I think so often we think about what are you doing with your money? How are you leveraging it? And we think about the idea of liabilities and assets. I think there are a lot of things that are traditionally seen as liabilities that are an asset if it is treating you and if you're taking the mindset of you are the biggest asset in your business. But I think then what I would offer is really then seeing yourself as an asset to invest into and being very intentional with how you're investing back into yourself. So remember, I said that was education, that was my mental health, that was my health. Those were the things that really make me feel abundant and rich. That wasn't buying, what I didn't do at the start of my business was buy a bunch of clothes to make someone else think that I'm rich, right? What I was doing was how do I leverage that money to invest in coaching, to invest in therapy, to invest in the education I needed to learn more about business, to invest in resources and tools, to invest in clean food, right? So I would invite you to think about what are those things that really treat you like an asset, because I think that's where we can get that a little bit confused. Just seeing if we have comments. Y'all are very, very quiet, but let me know. Hopefully you're just taking tons of notes, but let me know if you have questions, or this isn't going live, which is also very possible. But I don't think that's the case because it's showing me I'm live. It's also showing, let's see, we need to move that a little bit closer. Okay. So what I would say there is that's how I would think about liabilities, but really anything else then is the way Robert Kiyosaki talks about this is the wealthy are really focused on having more in their assets column than their liabilities column, meaning they're investing and they're thinking more about leveraging the money they're making. So we talked about that profit you're taking home, using that profit you're taking home more to pour back into assets than into liabilities. And so if we think traditionally about assets, those are things that are making you money. Now, again, I said I see myself as an asset because I am the biggest money maker in this. I give the biggest ROI anywhere. With everywhere I'm investing. But if we're looking traditionally, right, a great way to think about this, and the example I've used before with clients is if you think about, if you're someone who loves purses, if you love Louis Vuitton purses, right, if you go out and buy a Louis Vuitton, technically that's a liability. Now, if you go and buy a really epic vintage Louis Vuitton and you go and sell it 10 years later, we would say maybe that's an asset because it's making you some money. But for all things kind of being even here, going and buying a purse, that's great. If that makes you feel abundant, if that makes you feel rich, if that makes you feel like we're going to talk about the blueprint next week and the relationship with money, but just so you can understand liabilities and assets. If that purse makes you feel amazing and benefiting from the fruits of your labor, great. And I think understanding that would be a liability. However, if you love Louis Vuitton and you went and bought stocks in Louis Vuitton, that would be an asset, right? Because those stocks have the potential to make you more money. I don't know if anyone knows Denise Duffield Thomas, Lucky Bitch. I follow her on Instagram, and over the holidays, over Christmas, she shared that her husband gave her, it was like a Louis Vuitton box, and inside were Louis Vuitton stocks. And she is, I think a multimillionaire, and she does all money mindset. I thought it was just such a great example of exactly this. And what you'll just see is people who are building wealth and who are really being mindful of what they're doing with their money, when that profit that they're taking home, are being mindful of absolutely get those liabilities that make you feel good. Buy the purse if it makes you feel good, right? Buy the Louis Vuitton, buy the fancy trip. I stayed in one of the nicest hotels I've ever stayed in this year. My husband and I went on a wonderful trip, and we did that for our honeymoon the year before, and we flew first class, right? I love the things that are liabilities. I am all for that. And what I think is important in the conversation we're not having enough of is also looking at that assets column. And what I would invite you to think about, again, you don't have to agree with me, but my personal goal with the profit I'm taking home is how is that assets column growing so that it is lopsided? So my assets are outweighing my liabilities in my life. They might look like they're even to start, but over time, I really want my assets to grow because that's where all the freedom in my business comes from. That's why if my business never scales and makes more, I know we will have multiple millions, and I'm like, we have enough for all the liabilities we want, and I know I am set, and I have so much freedom if I want to retire early, if I hit a point where I'm like, I don't want to work, or I want to work part-time, right? Like there's so many benefits to that, and it's beautiful because I think it takes all of the pressure off of things like revenue share, where I think having pressure is detrimental, and all of that attachment and grippiness that I think can actually ironically slow us down from being able to make more money. So that is the way I'm thinking about money. That's the way I'm thinking about the money this business is making. That is something I would invite you to think about. Again, you don't have to agree with me. I'm not a financial planner. I'm not a financial advisor. I'm not an accountant. I'm not a CPA. And these are things I would invite you to think about, right? Not only thinking about profit and profit margin, but thinking about what are you doing with that profit margin and being really intentional with that. And just seeing questions. Okay, no questions. Oh, there are. Yay. Okay. Sarah says you're live and it makes perfect sense. You invest in yourself and it needs to be poured back into what is going to make you and take you where you want to be. Liabilities are awesome, but assets grow. Perfect summary, and it's exactly that. Liabilities, I love. Assets are really great because assets grow and make baby assets and baby assets and baby assets and family of assets that you can then go buy a bunch of liabilities with. One of my, if this is helpful for everyone to hear, again, you all do not have to agree with me, but one of my personal financial goals is to have my assets generating enough interest that I can buy all the liabilities I want from interest alone, right? I think, and where then the principal of my assets continues to make me money so that I'm not touching that. Like it just keeps making me money. That to me, I think is like, that gets my money brain very excited. I'm not at that place yet, but I know people who are in real estate who do Airbnb and or who own lots of homes, for example, who have set themselves up that way. But anyway, to come back to this, so assets essentially put money back in your pockets, liability takes money out. They're not bad or good, but I think understanding that difference is really important. And what I would, just seeing if my notes here, what I would offer and what I think is really helpful to think about and where I think so much freedom comes from is understanding that with assets in general, most assets are going to benefit you over the long term, and most assets will build you wealth but don't require you to make an F ton of money to generate that wealth. Now look, I want to be so mindful. I'm not like coming from the school like the, what is it, David Ramsey, it's like don't have your coffee and that it needs to take a long time to make money, and that we're not here to make $1 million in a year or in 6 months, and that that's not possible, and the only way to do so is to invest in assets. Like none of this conversation is about that at all. I think there's so much potential to make a lot of money in our industry, and I think there's a lot of conversation only about the making money, that a lot is also very skewed and there's a lot of smoke and mirrors there, and just not about this side where it just gets to be both. You can make a lot of money and you can have your money make you a lot of money. The more money you make, the more profit you have to leverage into assets to make you more long time money. So that is just huge for your business. I think that's really just a beautiful, like both short term and immediate term thinking as well as long term thinking. Okay. I've got so many notes here, but I'll talk forever about this. I want to bring up some of the things that I share that I would promise to talk about. So, what I thought would be helpful to hear, because I think, again, we just don't know sometimes unless people are sharing these things. And I know some of the ways I invest my money now, I just didn't know until someone even reflected to me or let me know these were possibilities. I'm going to share some of the places that I personally, that the assets, or some of the places I put my money, the profit that comes into my business. I will share a little bit, I'll share some other opportunities that I think are really common for people. Again, I have to say this so many times legally, I am not a financial advisor, I'm not a financial planner, I'm not a CPA, I'm not an accountant. Please don't take financial advice from me. Take this as information to then go do your own research around, get your own advice from your own accountant or from your own financial advisor. Have your own discernment, but hopefully I will share something here that will help you just to think about what you're doing with your money a little bit more. My husband and I yesterday just set up some different investment strategies for the year, and we were both just remarking how like it's so wild how it was maybe half an hour of time for us to set a few things up for the rest of the year that were just really intentional, that I know based on like stats. There's some good calculators you can plug in numbers online. I know just because we just took that time, because we understood where to put our money. We spent half an hour, we plugged a couple things in, and we did a lot to like kind of set it and forget it, that we will reap the benefits of this massively. It's not complicated, it wasn't hard, it's not confusing like most things, right? Financial abundance, financial wealth, your business, a lot of these things aren't complicated. They're actually very simple. We can make them complicated. There are lots of ways to make your finances super complicated, but so much of it is just having the awareness and then putting that into action. So my hope here is that I share some things that just give you some awareness and maybe an insight into like, oh, what if this is the year that I look at talking to my accountant about what sort of retirement fund through my business structure and setup might also give me a tax savings, and just start putting into that regularly. Sarah says, yes, this is an awesome goal. Yes, it is an awesome goal. I think you're talking about having the interest pay for all the liabilities. So, and one other thought I'll share here that I made a note of with some of the ways, I think this is actually is helpful from the thought process when I'm thinking about what we're doing with profit. Like I said, I'm always investing back into myself and my business first. I see myself as the biggest asset. And because I reliably know if we change nothing in this business, it is making a certain amount every year. Obviously, I can't predict the future, but I've been in business for almost 7 years. I kind of know how things are going to go. I know if I want to make more, where I can like open up some spots, pull back, etc. And without revenue share coming through, kind of what we can expect. So I pay myself a base salary every month. I pay myself the same, and then we use the overflow for, sometimes I pay myself a bonus. We do something fun with it. Sometimes we use it for leveraging into assets. When it comes to leveraging assets, I think just like a 101 here, again, do your own research, but just to kind of understand this, a couple general rules of thought. Time in the market or time spent investing is on your side. So the sooner you start, the longer you have for something to accrue interest and to compound, the more you can make by investing less. As a general, our market's a little funky. One of the reasons I wanted to have this conversation today is there's so much talk about recession. I'm not here to give you advice on that. However, historically, during a recession, this is when a lot of people also stand to be able to leverage their profit to make more money. Because my personal perspective and mindset is a lot of the things you might invest in are what I think of as on sale. And when things are on sale, I don't know about you, but I like to buy things on sale, not when they're at the peak highest price. And so I think this can be a way to an approach for the recession, not to be opportunistic, but to see that with every challenging time, there are also opportunities. And if you can be neutral, and if you can be, if you're thinking about these things and you have some of this knowledge, you can also make some smart choices that can set you up for success long term. And if you're doing so, this can also be how you can feel a lot more secure and safe during any economy, because you are building that money that's going to make you money, even if, your business is kind of ebbing and flowing. Hopefully that makes sense then. So the kind of like overall thought is time in the market serves you. Don't worry if you're older to start today. The other thing that I think is helpful to know is that everyone has a different risk tolerance when it comes to how you're going to leverage your profit into assets. As a general rule of thumb, again, I'm not a financial advisor, but this is a general approach. Most people suggest to diversify where you're leveraging your money into assets, meaning to not put everything into one account, one type of all real estate or just one stock, to diversify so that if we are in a recession, if you need to pull money out of your assets, right? If you're sick, if you're retiring, if you want to take a break, if you're going to take a sabbatical and travel the year for the world and you need to pull, if you're starting a business like me, right? I drew on my assets that I had built up when I started my business. We don't know what the market's going to do. If you've diversified, while let's say your stocks are down because of what the stock market is doing, your real estate might be up, right? So you could draw on that asset without kind of taking a hit, so to say. So just kind of like a general thought there. I know this is a lot. I'm throwing all at you, but I hope you can just like take nuggets that resonate for you for kind of what you need as we're talking through this. And then everyone has a different risk tolerance. So just really check in with your own risk tolerance and what serves you. I will share my school of thought and thinking is to both have some like immediate resources, very safe, secure ways that I am having some assets at hand, but knowing that the more safe, secure, reliable, like less risk, also in general, the less potential for reward and growth in terms of having my money make money. So I like to have some of that. I like to have some that is kind of like in the middle. And then I always like to have something that's considered a little riskier, because that I think also tends to have the largest potential for return. I just don't invest in anything that is super risky expecting to get that money back today. I think of it as like going shopping, where I'm like, that money is gone. I just hope it comes back to me. So I think of it that way when I'm playing with my money. So here's where my money is going. Again, you don't have to do the same thing. I'm going to also share some other places you could put that profit, but just some things to think about. Obviously, I have a business and personal banking and checking account. I know this is so like basic 101, but you know what? When I started my business, no one told me because there is no handbook for entrepreneurialism. And there, like, that's like the worst phrase, right? Like, no one told me, no one's supposed to tell us anything. I found out on my own that, oh, as a business, you have a personal and a business account. You pay your business. The money your business makes is not yours. You pay yourself from your business. That is your money. But everything that hits your business, when my business makes a million revenue in 4 years, that does not mean Kim Argetsinger makes a million revenue in 4 years, right? Kim Argetsinger gets paid a salary from that. So having both of those, and then I personally have a savings for both. So I have a savings for our business account, and I have a personal savings account off of my personal checking account. I also have a savings account for taxes. I find it just easier to keep that separate. Not everyone needs to do that. That's just what I personally like to do because I know taxes are coming. I don't want to think about it. I just want to know that money is there. I have an accountant. They have access to it. That way they can pay whatever needs to go out and it doesn't need to be a concern. In terms of what we personally keep in the business savings account and what I keep in my personal savings account, this is where there's going to be a little controversy. But hear me out on this. With the economy doing what it's doing, I think it's helpful for everyone. And if you don't have a business savings account because you haven't gotten to that place in business yet, don't stress yourself out. That's fine. I did not have a business savings account when I started my business. I had a personal savings account and I then had to go and borrow money and get an extra job, right? That is normal. I kept my 9 to 5. I had other jobs, right? Like that was my so-called savings account when I started my business. And as you're bringing in more money, what you're doing with that money, I think it is helpful to have some overflow in reserves so that you know you can kind of ride the normal ebbs and flows in business. Business is not a straight line. I have a live stream coming up in like 2 or 3 weeks about this. We're going to talk about my lowest income month again, and I want to share a lot about that. But you've heard me talk about this before. Even if you're on a scaling trajectory, your income is going to ebb and flow. And ideally, you're also investing back into yourself and your business and you're paying yourself a salary. It can be really helpful to have some surplus and savings that you know you could ride a few months out to cover your team, to pay for your coach, to pay yourself a salary, right? To have that there so that you're not having to approach business from a really reactive place, from a place that has you making decisions because you're feeling fear, because you're feeling scarcity, because you're feeling reactive, because you're feeling like, oh my gosh, I need to hustle and make money. Kind of the worst place to sell an offer from is I need to hurry up and make money. I was just chatting about this with a client yesterday. We were like, that's not a good reason to put an offer out. A good reason to put an offer out is because you know it's going to help someone solve a problem, not because you need to hurry up and make money. So that's personally how I think about it. Now, the controversial part here. Who knows what's going on with the economy. If some people call it a recession, some people don't. I think it can be helpful to think about if the economy does kind of, I guess some people would say we already are. Some economists say we aren't. Whatever news you're reading, there's definitely inflation. There are definitely things happening in our economy. I think it can be helpful to think about, do you want to have a little extra buffer in those savings accounts? And here's the controversial piece. My school of thought, because I know we have enough surplus. I know what my business can sustain. I personally believe that at a certain point, if you are taking an excess amount of your profit and putting it into your savings accounts, you're actually leaving potential millions over the next couple of decades on the table. Because particularly if we are in let's say a slight downturn of an economy, and things are on sale, if all of your excess profit is going into savings, I'm not saying don't have a savings. I've always had a savings account. I told you I had a jar of $9 that I was so happy someone didn't steal when I was a kid, right? I love savings. And at a certain point, if you keep saving for, something bad to happen, that's a mindset that's basically coming from a place of what if something bad happens? And for those of you who are manifestors and tapped into energy and mindset, that's not really the mindset we want to approach money or savings from, because it's basically saying I expect this bad thing to happen, and then we can't really be surprised when we need to leverage that money sitting there. And after a certain point, of course, like have the buffers there. The amount is going to be different for you than for someone else. Get really clear on what you need to feel safe and secure and to be able to kind of ride where your business is at and the expenses you have. But anything after that point, most savings accounts are not making you money. They're just holding your money. They're just keeping you from spending your money, right? Maybe there's like the smallest percentage of like of interest that you're going to get. If you take that same overflow and you put it into your retirement, particularly if you have retirement that is set up through your business that also gives you a tax savings, right? You stand to invest into assets that are going to make you money and compound exponentially year over year, like decade over a decade, as opposed to just sitting in that savings account. Say you bought an investment property and you rented that out and that started making you a salary, right? Like that is going to give you exponentially more than savings is. So again, I know this can be a little controversial. Use your own discernment. I am not a financial advisor. I think this is just something that I personally didn't always think about. I almost oversaved to my own detriment at one point. We'll talk about this more again in next week's masterclass. But this is something I learned again from Robert Kiyosaki. He has some really great books on this. And one of the things he says is saving is for losers, and not calling someone like a loser, but just in terms of losing out on what your money can do for you. And at a certain point, truly, if you keep saving, you're losing out on, you're costing yourself. It's an opportunity cost in terms of the interest and the compound effect you could make by leveraging into assets elsewhere. So let's see. Julie says, hi, Kim. Catching the tail end probably, but totally agree with this and the damage that piling money away can do, especially in these times. Yes. She said, I did open a new savings account for future investment property, but it doesn't mean I'm saving all my profits and not spending on anything else. Yes, lady, you speak my language. We are almost at the end, but you know me, I'm long-winded. So I've got a lot to say on this. So we'll probably be here a little bit longer, and I'm glad to have you. And it's exactly what Julia is saying. We have a savings for some property type things, and what we're also doing is investing. I'll share some of the other ways, but we're investing in some kind of more midterm risk that aren't super risky ways to invest our money for those future investment properties, so that while we're saving that money is making money, but it'll be a little easier to pull out of the market. And I think that's pretty much what Julie's saying. That's what I'm saying. And again, we're not saying don't save. We're not saying don't have that buffer. I think that is actually very important as a business owner and responsible, especially if you're paying team members. And like, I have a team. Like, it is very important to me that I pay my team and I pay them on time as a responsible business owner, right? That I hold my word there. And to what Julia and I are saying, at a certain point, especially given a downturn economy, it really starts to cost you money. And I don't think it's the healthiest mindset, because it starts to come from a place of like, oh my gosh, I'm so worried something's going to happen. I need to be prepared for the worst case, as opposed to, I so know I'm going to ride this. My business is fine. We can sustain this. We've got some money in savings. I'm expecting the best case possible. And I'm expecting that I'm going to come out of this having even more money, right? It's such a different mindset. And that's really the mindset I want to invite everyone to think about. So we have those accounts. I obviously shared, I started retirement at like 21. This is one of the things that I found really valuable to learn about. So there are different retirement vehicles that you can invest into. I think traditionally there's an IRA, there's a Roth, there's different things if you have a 401k through your business. As a business owner, depending on your, oh, don't mind my cat. She like wants to eat my pretty flowers here. She's begging for food. Depending on your business setup and your business structure. I am an S Corp, for example. So again, not a financial advisor. I'm not a financial planner, accountant, any of that. CPA. Talk to your people. But depending on how your business is set up and the revenue your business generates and the profit you're taking home, there are different retirement vehicles where you can take more of your pre-tax dollar amount or revenue, put that into those retirement accounts. So you're getting the benefit of putting this money in, playing the long term, getting the compound effect of that money. What is it? Doubles every 7 years, I think, is kind of what you can expect. But you're also having it go against your profit, which means you're not being taxed on that. So if you have, for example, there's a SEP IRA, which is what we used to have. We now have a solo 401k because we can put more money in that. There's other, depending on what you're making, there's other vehicles like this. It's completely legal, but what's beautiful, again, is you're essentially investing into your retirement from your business, and you're getting also that tax benefit. So you're kind of getting a double like a double benefit to me, that's like free money. I'm like, and then like my brain just gets so excited about that. So we always max those out. That is, I think, just like a no-brainer. And that is something I would say, again, I'm not an advisor, but if this is something you don't have or you haven't thought about, or you're like, Kim, this is brand new information, call up your accountant. If you don't have an accountant, call up an accountant. Do some Googling online. Most of the stuff you can find online. Do a little research and see what would benefit you. Like, these are things that most of these things are pretty simple to set up on your own. If you need something like if you have an S corp and you need to set up a solo 401k, I just called up. I use Vanguard for many of my things. Vanguard.com. Again, I'm not an affiliate, not an advisor, but I've found their fees to be really low, and I find their funds to do really well. Anyway, like it's like a 20-minute conversation with someone. It is amazing how figure outable, as Marie Forleo would say, these things are. So if you're hearing this, if you're like brand new information, or if this feels overwhelming, I promise it's not as overwhelming as it sounds, and it's pretty straightforward. And a lot of these things you can set up and kind of forget. I will give you, again, not advice, but just something I learned, and see if this resonates with you. What I learned when it comes to, so let me share a couple other things and I'll share what I've learned. So some other ways, these are not things we're currently doing, but you can invest in bank products, leverage your money in things like savings, like a CD, bonds. There are mutual funds. We do have a brokerage account with a mutual funds where we put what we're not doing with some of our retirement into there. Regular stocks, like if you just go, we have an account with Ameritrade. If we go in there, if I want like Apple stock, for example, we have a portfolio of stocks. And these tend to be, a little bit more risky. I would say do some research on these. Know that there's a little bit of gambling involved when you're investing right into a stock. Pick companies you trust. I would definitely say play the long game. I'm not into day trading or anything like that. What I did learn and what I would offer here, and again, I am not an advisor, do not take advice from me, use your own discernment, do your own research. This is just my experience, my thought process to open up the conversation. Even if you don't agree with me, that's great because it's going to have you thinking about this. One of the things I did a year or two ago was took a large sum of money and invested it into a bunch of stocks overnight. The market kind of turned the next day. It was a very big lesson for me. We'll ride that out. I will make that money back. I'm not really worried about it. However, what I love about things like this, where you're like, oh, like my money just taught me something. It caused me to do a little bit more learning and education. And what I learned, and again, do your own thinking here and discernment, but I have found that if you are investing, if you have a large amount of money to invest, and if you invest a small amount daily or weekly, it's called dollar cost averaging. You can't time the market. That's just not, or you could try to, but that's just not really a thing. They've actually done studies. The stocks and portfolios that perform the best are from dead people because they can't get emotional and they can't go messing with things and they can't go trying to predict the market. So I that is one thing I would advise, like don't try to predict the market. But if you're taking a large sum and you're investing a small amount every day or every week, you're catching the market at different times. And so it might be high one day, it might be low one day. Well, if you're investing when it's high one day and low one day, it's going to average out, and that's going to just help you long term. All of this is long term stuff. Long term, that's really going to help you to get the biggest leverage point and the biggest return and the biggest compound effect from your investments. Hopefully that makes sense, but that was something that I'm really grateful. It was an expensive lesson, and I'm so grateful for it, so I hope that's helpful for you. Real estate is another common one that Julie and I were talking about. And with real estate, I think there's what I would offer. I did a podcast on this, and then I'll read Julia's comment. I did a podcast on, wow, controversial opinion. I like to have those. One of the reasons we're not investing in a personal property in New York City. And again, have your own discernment here. I'll see if I can find the podcast episode and link it here. But with real estate, what I would really invite you to think about, and just again, do your own research here. But in many locations and in many situations, a piece of real estate that you own and live in is a liability, not an asset. A piece of real estate you buy and leverage to rent out, to Airbnb, to do as a short-term rental, to flip and to sell, is an asset. That does not mean it's not a great thing for you to buy a home you live in because you love, right? I'm all about liabilities. I buy a lot of liabilities. We will probably buy a liability place to live in New York City. I'm just not thinking of that as an investment and as a way to build wealth. I'm very aware that that will be a liability. And many situations, this is like almost a whole nother conversation, but we're on it. In many circumstances, for example, here in New York City, we rent a luxury loft apartment. We're still, because we're not putting a huge chunk of money as a down payment to do this, that huge chunk of money that could be a down payment, we can leverage elsewhere to make far more money than if we bought something similar where all of that money would be sunk into, and the return would historically be around, I think it's like 4%, but we'd also have to, maybe it's 7%, but we'd have to offset that with mortgage costs and the fees. So without getting, I get a little too excited about the geeking outside of this and gamifying it. But I think just, again, these are just like things to think about and to not just automatically, like, this is what everyone says to do. Even if I'm saying something, right? Do not listen to me, go do your own research. But I think there's so much historically like traditional information out there that just taking 10 minutes, 15 minutes just to ask some questions and to think about it can serve you like your future self will thank you so much for. Julie says, thank you for sharing what you're personally doing. And obviously everyone needs to do their own research, but not many multi 6, 7 figure business owners are so open about their finances. And I find it so helpful. Oh, I'm so glad this is helpful and not, I was worried maybe I'd be geeking out a little too much about my love for numbers. So I'm so glad that's helpful, and it's my pleasure. I know it's only because people have been open with me that I've been able to make some of the choices and decisions we've had, and because people weren't open with me, some of the mistakes I've made as well, which I take full responsibility for, but you know what I'm saying. So I'm so happy this is valuable, and if you have questions, obviously let me know. Okay, a couple other ones here. So another place that we personally do invest money into is something called I don't even know if it's called a REIT or an REIT. They have these in different forms, but essentially it is like it's like it's like a mutual fund, like it's like a stock portfolio, but for real estate. So we invest through a company. They have bought into tons of real estate properties. We invest every month. And so it's like we own a little stock of all of those properties, and then we get a return on that. I frankly am lazy AF and I run a business, and at some point will look a little bit more into real estate in terms of leveraging it as like rentals or something like that. But I, at this state, find some of these other options a little bit like, I know I can put my money in there, it's going to make me money. It might not be quite as big a return as if we were to invest into a property, but I'm basically lazy in that way and don't want to put some of the sweat equity into things. So that's an option if you want to be able to diversify, not have everything in stocks, right? Not have everything in savings, not have everything in bonds, and you want to be able to benefit from the real estate market. That's one option. There's a lot of great companies. We use a company called Fundrise. Again, I have to keep saying this. I'm not an affiliate, I'm not an advisor, any of that. Do your own research. But if you just do a little Googling, you'll find a couple of these. There are other options like this for, like in the tech sector, for storage units. There's a couple other ones we're looking at, but it's a lot more, I'd say like everything's a risk, but it's a lot more of like a safer bet, but that's going to give you a little bit more than your savings account. And when the economy is doing well, these can, average like 10, 11% return, which I think is pretty great. There is cryptocurrency and NFTs. Now, this is something we are definitely invested in pretty heavily. I think this is what I would say falls onto the heavy risk sector. I do believe in, especially at my age, putting some things on the risky side because we could lose it all, and I have to be okay with that, putting money in there. I'm not putting that out into the universe, just practically speaking, and I really do think that the high risk can also yield a high reward. I think it was my coach, Lacey Seitz, might have been someone else. I believe it was my coach who said to me at one point, she was a part of like her grandmother's in like a like a wealthy community, and how everyone that was elderly there who was really wealthy, no one there was like, oh man, I'm so mad about that like one risky bet I made and lost some money. the only thing people are bummed about is like the like investment that got away because they were like too scared or didn't take the risk. I would not say this would be the first, like if you're looking at like I've never saved or invested before, I'm not an advisor. I wouldn't start with cryptocurrency. And if you have a bunch of things and you want to diversify, that's just always rang in the back of my head where I'm like, I also want to like I want to be risky enough that I'm not like, oh man, I like wish I had jumped on that. So we do invest in that. I personally really believe in that and think that that's going to be around for the long term, and we throw money there. I'm just seeing if there are any other comments. NFTs I have bid on. I don't actually own any NFTs at this point. I'm not as educated on those, but crypto we definitely have a few different coins and a few different accounts. There's annuities and insurance. There's other businesses, and so you can invest in other businesses. There are some people who do this really well, and that's their whole business. There are other assets like gold, silver, artwork. We invested in a piece of art this year. I will say we invested in a piece of fine art that is technically, I guess you could consider it an asset. We could turn it around and sell it. I don't see something like that as an asset in that I have that planning to leverage it. We plan on keeping that forever. That is not why we got that, but those are also technically considered assets if we're looking at kind of the liability asset column. There are other things out there, but these are kind of like the general scope, and those are the places we're currently looking at. I'm fascinated by this. I read these like articles and magazines and books for fun. I have a stack next to my bed, so I geek out on this. So I'm always looking at other things. There's usually things I'm like dabbling in. What I'm also always interested in as well is really long-term sustainable growth. I'm not big on, I mean, there's a lot of things that are like get rich quick. I personally like feel like if it sounds too good to be true, I'm all for like quick money. I am all for manifesting. I'm all for that. But like, I don't know, like I like to be really mindful of that because I think there's also a lot out there that sounds a lot better than it is in reality. And there's just some like really solid proven things, and what I have seen to be true with, again, looking at your profit, what you're doing with it, and the conversation we started with, which is creating that sustainability, creating that ease, and where you know that even if your business never makes more money, not that it won't, not that we're not here for that, not that you can't quadruple your income this year, but that in any economy and without having to put pressure on your business, you know that you're setting yourself up to have that freedom, to have that security. To me, that is abundance upon abundance, not we've made a quick cash injection 1 month, we've over leveraged ourselves, spent half of it, barely have any profit, or it took so much work, so much effort, we've spent so much of it on liabilities that we have to make triple the next month to be able to keep up. Otherwise, we can't sustain our life. To me, that doesn't sound like financial freedom. What sounds like financial freedom is having a business that you love running, that you get to make money on your terms, that you get to make money doing it the way you want, that you know can support you, but that you also know you are leveraging the money you're making in a way that, again, you can set yourself up. I believe this business will make $1 million a year. I like with every fiber of my being, and I feel so great knowing there is zero pressure and knowing I'll be set up to have way more than that because I'm being smart with what I'm doing with my money, and also getting to benefit from tons of liabilities that make me feel really good, because liabilities are not bad. And kind of with that thought, as like a closing, when we're thinking about like what are you doing with your money, what I would really think about is, and we'll talk about this more in next week's masterclass as well, but the whole idea here is just being really mindful and being really aware of this. I think so often in our space, again, the conversation is just make more money, keep up, and make money to be able to buy things you can post on Instagram to prove you make a lot of money. I'm not hating, I'm just being really honest and true. And what I would say is that stuff is great. I post on Instagram too. I posted my painting when we got that. I'm proud of it. I love it. And remembering that for every liability and thing we're excited about that we get to show, also being mindful and very intentional with all the money that no one else can see, that gets to give you all of this like well, leverage points, right? Money making money for you. I think that's sexy AF, right? Like money making money for you and interest that you can live off of. Like that's your security, that's your freedom, that's your business. That turns your business into an asset, right? An asset that is more than just making money now. But I think my business, we don't sell passive revenue products, but I make passive revenue, like real passive revenue through revenue share. And then because I use my and leverage my business as an asset, we're making so much passive revenue elsewhere. Like what an amazing thing. So I hope that's helpful to think about. I'm just seeing here. I feel like I had one more. Maybe I shared all the things. I shared this already. I shared the other place I invest back to into myself as an asset. And yes, and we talked about things being on sale in this economy. So I think those were all the points I wanted to make. If you have any questions, I know I dropped a lot of things in here. If you have questions, if you're watching the replay, throw them at me. If there's something you want to hear more about, I clearly love talking about this. I know it's not directly business related, but these are, I think, these are the conversations I think we need to be having more of, that we need to think about as smart business owners. If you're here, I know you're a smart business owner, right? Like these are the things that matter. Let me know. I'm happy to do another conversation about any of this. We will next week in our masterclass be looking at this through more of the mindset lens and your money blueprint. Again, money blueprint, your millionaire money blueprint, meaning kind of what you were raised to have a relationship with money around, and then how we can shift this. We're going to talk about that healthy and unhealthy relationship with money. It looks different for everyone. I said this at the beginning, but my unhealthy relationship with money, I bet looks like many of yours healthy relationship with money. So we're going to talk about how to discern that, how to shift that, and then I've got some other tools so you can set intentional goals with your money that come from more of this neutral, grounded, intentional place instead of this very pressurized outside in place. We're looking for that inside out place because I think that's what serves everyone long term and in the immediate, because again, we're here for the money now and for the money later. So again, if you have questions, drop them for me. I will drop the link for that masterclass. Actually, I think I can grab it right now. It is kimargetsinger.com/millionaire-blueprint. And I will drop the link afterward. Oh no, here it is. I was gonna say I can't multitask, but I think, no, I'll drop it afterwards. I'm not very good at multitasking. And then if you wanna have a deeper one-on-one conversation about this, not from the financial advice standpoint, but if you're hearing this and you're like, Kim, this is great. And also I'm thinking about my business and realizing that I don't have this set up in a way where I'm making money in a way that feels good. That doesn't feel sustainable. I'm making maybe a lot of money, but I kind of secretly want to burn my business to the ground, or I don't know how I'm bringing in money in my business, or I'm over leveraged. I think that is something that happens in our space unintentionally. I think smart business owners get sold that you have to invest so heavily that you're over leveraged and not bringing in a profit. And you just really want to look at making money in a way that serves you, that feels good, that is your version of success, being really clear on how to make money in your business. So that's everything from your messaging to your marketing to your sales process to having all of that really fit you and the way you like to show up, the way you like to serve. We are all about sustainability over here, as well as that profit margin and what you're doing with that money and being able to think about that really strategically from a really grounded, neutral place as a CEO. That is what I love to support clients with. I'll drop a discovery call link below. I would love to chat with you and to support you with that. All right, I love you all so much. I will be back next week with our masterclass, and I will see you then if I can figure out. Oh, here it is. I'll see you then. Bye, y'all.